Gold futures rebound after stronger U.S. data and really supported by the expectations of a more accommodative Federal Reserve after weak U.S. data signaled slowing consumer spending and rising growth concerns. Now, we did have the non-farm payroll number come out at 130,000 for January, above the consensus estimate of about 55,000. That caused some volatility in those metal spaces. The unemployment rate edged lower to 4.3%. Now, gold and silver prices have been rising recently, primarily due to a combination of heightened geopolitical tensions, as well as persistent central bank buying after a softer U.S. dollar following a period of record high volatility. Now, if you look at the interest rate cut expectations, and this is where some of the volatility during this session took place, the rate cut expectations coming into that March 18th meeting were sitting at a 21.6% likelihood that the Fed would cut rates by 25 basis points, and that was before the payroll data was released. After the data came out and that big beat on estimates, 7.9% chance that the Fed will cut rates on that March meeting. So a big decline there. You go to the June meeting, it was a 77% chance that they would cut rates, and that dropped down to 60% post the jobs data. Now, on the flip side, we saw copper futures jump over $6 as China plans to raise its share of electricity trade to 70% of the nation's total consumption, according to a Wednesday statement here detailing a government strategy for 2030 about the power market. Now, the world's biggest energy consumer, they use about 2 times that of the U.S. each year, aim to expand its regional spot power trade to overcome these transmission bottlenecks here. So we're seeing signs that copper demand may be continuing to increase over in China. And then on the same side, we saw silver volatility. It continues to fall, and what we are seeing futures jump about 3% as the average true range here sits at about $11 per day.